Hey, it's the AK Option Trader back at you with another trade stock charts video. Today we want to talk about gaps, alright? What are gaps? Well, it's not the Alfred E. Newman gap in your tooth type thing. These are gaps that are very important in many charts and can be used for a lot of trading techniques. But before we get into the techniques and how to play them, I want to show them to you and what they are and kind of explain them to you. For this demonstration, I'm going to use probably my favorite thing to trade is the QQQQ, the cubes, the Power Shares Exchange Traded Fund. It basically tracks the NASDAQ. It's just a stock ETF that tracks the NASDAQ. An ETF is an exchange traded fund, which means it is a group of stocks, not just a single stock. All right, so it's there's millions, not millions, there's a lot of them out there, and I trade a lot of them because they don't move on a single stock moves. They move differently. They're a little bit more stable, and they usually have lots of volume and lots of they're easy to trade. You can get it in and out pretty easy without having to worry about it. Good prices on the puts and the stocks and the calls and all that stuff. So we'll get into that in a bit. So let's talk about a gap. A gap is what this looks like right here. All right, this, my friends, is a gap. What a gap is you have a stock. Okay, we see this candle. This candle, we got actually a little gap here, but this is a good demonstration. So this candle closed. We know about candles. Here's the low, here's the high, here's the open, here's the close. All right, so this candle closed right here. All right, the next day it opened where? Right here at the bottom of this candle. Okay, so this price is 64.15. It closed at 62.13. Open at 64.14. All right, so it opened at a price that was much higher than what it closed at. That's where it started the day. And guess what? It may have come down a little, but it didn't come all the way down, leaving a gap. All right, some people call it a window. You can call it a gap, a space, whatever you want, as long as you recognize it on the charts. All right, now the thing about gaps, the best place to see them is on a daily chart. All right, if we looked at this same chart on a monthly chart, you're not going to see gaps. You just don't see them because one month it doesn't close at this level and then the next month open at another level. It just don't happen. All right, on a weekly, same thing. Daily charts, intraday, it happens sometimes intraday. All right, sometimes I've seen it happen intraday. It is not a common occurrence intraday. It does. I have seen it happen. Stock gets halted. Something happens. Some kind of news comes out. You know, and the stock's trading at $20.20. All of a sudden, bang! Next ticker is at $20.50 or $21. So you got a little intraday gap. Those aren't near as important. Normally gaps, all I care about, all I look for in gaps are daily charts. Okay, I'm looking on the daily charts. So let's just go ahead and look through from before I explain how we're going to use them, and I probably won't explain that on this video. All right, so this is a gap to the upside. All right, gap to the upside here. So we're going to scroll along. Let's look around. Whoa, another gap to the upside. Okay, so big gap to the upside. All right, so this is one we're looking at. Now I want to find some to the downside. Another gap to the upside, which is common. Okay, keep this in mind. Notice we are in a uptrend. We are trending up. When you are trending up, it is common to get gaps to the upside, and that's where we're seeing all our gaps. Here's a gap to the upside here. See, if you get rid of this candle here, if you can't see that candle, boom, there's a gap to your upside right there. All right, so if I move this over here, there's a gap to the upside. So all right, so you see that? So you can see it over here on the edge, gap up, boom. All right, so you can call it gap up. There's different gaps. We're not going to go into that. I just don't have time today, but they're called breakaway, measuring, and exhaustion gaps. Generally, the breakaway starts at the bottom of the move. The measuring is a certain measure of the move, and the exhaustion gap is generally what happens near the end of the move. So we will go into those a little bit more as we get deeper into our studies here, okay? But let's find some down gaps, all right? Okay, so now we're in a downtrend here. And we had an up gap in our downtrend. Remember, that's kind of rare, yeah, but it happens, all right? So that could be a sign of a trend changing. We're just going to keep circling along. You can see I didn't find them ahead of time. Oh, here we go. Here's a nice little down gap right here. Boom, pops out. All right, so you can see they're somewhat common, but they're not every day. All right, and they mean things. You can see in this upside gap, it meant the market kept going up. But there's some things we're going to learn about gaps. Our windows, like I said, getting filled. Here's a little down gap here where the wicks almost touch, but they don't. And the close to the open of the next day, because look at this. This is a black candle, so it opened here, closed here. So the close of this candle is right there. And there's a gap there. Gaps are very important to know. You're going to hear people talking about them. Remember we talked about doji stars, okay, shooting stars. This has got a gap on either side, all right? This is a signal, a strong signal, all right, that this move was not going to be sustained with the gaps on each side. Was it sustained? No. That's something we're watching for all the time. So gaps are going to be used. You're going to hear me talk about them a lot. You're going to see them a lot. So I just wanted to point them out to you. Here's a downside gap right here. Look at this. From 2 bottom wicks. This is significant too, showing that this is a pretty significant area, a pretty significant line in the sand. Drops down gap here. All right, and then a gap on the other side there to the upside. Doesn't matter the color of the candle, it just matters that there's a space between the open and close. You can see a lot of them. I'm not pointing them out. As we scroll along, you should be seeing them in here. You can see them in there. Bang, nice one here. Bang, nice one here. Real huge one here, all right? Some of them get filled a little bit by wicks, some of them don't. That's what we're going to be looking for. Gap fills, we're going to be looking for them, using them as support and resistance areas. We're going to use them for a lot of things. Here's a real nice down gap. Look at where it closed. Look where it opened here. 25.50, 26.25. Okay? So any chart, daily charts, is where we're going to be looking for gaps. To the upside, generally in an uptrend, or they're to the upside. Generally in a downtrend, they're to the downside. Here's a nice downside one right here. Upside one, double on each side. That doesn't happen very often. Double side gap. All right? So I just wanted to point them out to you. I just want you to see them. Take some time to go through some charts and find some gaps. Maybe you can figure out some of the things you're going to learn by looking at gaps on your own, you know, without me even telling you what we're going to learn from them. Like I said, just don't have enough time to go into it today. That'll be in an upcoming video, but I wanted to point them out to you. Okay, so pretty simple. That's what a gap or a window is. All right, when the stock closes at one price, opens completely different, higher or lower the next day, which it did right here. All right, so this day closed high, closed at 30.73, and it opened at 31.29, so it left a gap. Okay, left a gap. Same thing, it can do to the bottom side or the upside. All right, so there's gaps. You got the quick down and dirty on gaps. There's tons of theories on them. We'll go into some of those here in a bit, but for now, this will be the AK Option Trader signing off.